Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday, it's July 9th. This will be our chart lesson today. And actually, no chart lesson tomorrow, so I'm probably going to take off a little early tomorrow. I've got some personal items I need to attend to, so I'll probably be a little slow on email tomorrow as well, but I'll make it up over the weekend or something. I'll take an hour or so and read some emails, but if you don't hear from me during the day tomorrow, everything's good. I just left here early. I got some plans for tomorrow. I'm probably going to play a round of golf tomorrow. I'm going to try to play my first golf since my eye surgery. I've gone out and hit a round a few times, but I haven't really played a full round. But I'm going to try to play one tomorrow if it's not raining. So if it rains, I'll probably be here. But anyway, um, what looked like was going to be a tight range early on turned out to be a big sell-off, and then we took most of it back. So the gap was easy to fill today. We opened right in here, and the gap was just right below, so it didn't take much to fill that today. Honestly, I think really what this big sell-off was actually filling the gap from a few days ago. If you remember, where was that? I think it was this day right here. Yeah, this was the day we closed way up here, and here's the gap. So we never even came close to filling that, and that's around 31, 15, 16 maybe. And you can see today we traded down to about just below that. So we did fill that gap today. So that gap's been filled. Once it was filled, prices traded higher. So that's probably the likely target that we had, was to fill that gap that got missed. And that's usually the way it works. There's an old rule, I don't know if I believe the rule, but it's an old trader's rule that a gap will be filled in 3 minutes, 3 hours, 3 days, 3 weeks, or 3 months. Uh, you know, they're usually filled pretty quickly, but anything past 3 days, and generally they're filled within 3 days, would be my. Usually they'll fill on the same day in most cases. If they don't, it's usually going to be a few days. So that's been my experience. But um, very rarely do they not get filled on the same day or later that day, or early the next day maybe. So, but anyway, we had this huge sell-off. We had a nice two-tier channel, and it just steepened right here. And you don't see that often, but you'll see it from time to time. And notice we got to break that a new low, and then prices reversed and headed off. And the other thing to notice was that once we made this first leg down, once we started heading lower again, you can see there's your first leg, and then the next leg headed down, and we actually surpassed that just a little bit on that trap right there, and then prices rallied. So, but we did get a break of this. This is a fairly long channel here, and it's running congruently side by side with the EMA. When you see that, that's usually pretty strong, and that's why I marked that one trade. I marked it green because we're not really that far away from the EMA, and we're right off the key entry point. They're really running together. It's just a first entry, so it is a little bit of a double top too. We'll talk about that when we get to it. But we had the break, a big strong move to a new low, and we tried to make another leg and reversed, and it was all uphill after that. So a couple of things to take note of. There's several ways to get this first measured leg down. Obviously, you want to measure the range just in case it's going to be a range day. And you notice we did get a little bounce there, and then we tested that from underneath before we went lower. The other way here was measure this first leg and then look for a measured leg down. You see we bounced right there. Couldn't even get back to the trend line though. We just kind of went in this little range, and then the bottom fell out. So we'll back out, talk about the big trades, and we'll go from there. I won't make it hopefully big enough. When you make it big enough for everybody to see the bars, sometimes you can't really see the big picture, but that's why I try to show you the big picture first, and we'll back out and look at it again at the end. So, but we were in the range, and we just came off the lows and we're working up. Normally I would tell you, you probably wouldn't want to enter this close, but there's still a lot of room right there, and we're definitely making a little trend up here. There's a little bit of a trend up, and I don't have it drawn on here, but you can see prices are making higher highs and higher lows, and there's a little bit of a hidden second entry here. I marked this green. I don't know if you really want to take this trade, but we're probably going to at least test this high here. That would be my expectation. And so you may want to take this trade. I mean, notice the high, you're moving down. You try to go higher once, and then you move on down, and then so it's a two-legged correction there. That's what you call a hidden second entry. I hate to even bring that up. I probably should have just left this off the chart, but because I'll probably get 50 emails about hidden second entries now, and they're really advanced. If you're just trying to learn second entries, don't worry about them. Basically, all it is, if you went to a smaller chart, you'd see a first entry and a second entry there. That's what a hidden second entry is. So just don't. You'll learn to see everything on one chart as you get more skilled at this. Right now, you couldn't see that probably if you're not a skilled chart reader, but there's a second entry in there, and that's why price action works on any level. If you go to the next level down, you'll see the same thing: second entries, measured moves, the whole 9 yards. If you went to a larger chart, you'd see the same thing again. But anyway, you might take that entry just to try to catch this move back up, because you don't get much else other opportunity there. So and of course we top out up here at the overnight highs, and we make a lower high, and then we make another lower high from there. That's really your lower high entry, and notice how it pushes through the EMA. It actually breaks out of here and pulls back. And if things were trending or whatever, I'd say you don't want to take this trade. But because prices just came off the high and we're looking to get a ride back to the lows, that's a pretty good entry right there. And you can see, look at it go. And then you get a break. You get a two-legged break. Unfortunately, that second entry doesn't give you a good entry, and that's pretty congestive. It does drop on down to the lows. It bounces. It makes a higher low here. I was a little concerned about that one being right into the EMA. There is a failed second entry short here, and I didn't mark that one. I meant to, but really it gapped over and you probably missed it. And what you don't want to do here is, once this has gone too far, let it come back, because with a big leg down like that, you're going to get another leg down, and you don't want to be too aggressive trying to catch a long here. So I didn't mark anything there. This actually should be up here like so. And here's another thing to notice too. You do get a little close out here at a new, outside the line here at a new high, but it's, is that a convincing close outside? Yeah, maybe, maybe not. So you got to be careful getting short up here. I don't really have a setup on mine anyway. I mean, we've already had a first entry, a second entry, a third entry, and that would be a fourth entry short. And what that means is you got a trend working in the other direction. We assume that's probably a correction, but we don't know. We could just keep going higher back to the other side of the range. But I drew this trend line off the lows and drug it up, and lo and behold, it turns down there. So when we get this lower high, I like entering right there. It's a relatively small bar. We haven't got a lot of those until the last few days. We've gotten some, prices are starting to get back more, less volatile, I should say. And your signal bars, you're starting to see some smaller signal bars that fit the 8-tick rule and like you would expect. But you head down, and then you get a failed second entry long right here. And of course, we've already showed you the measured move, and we're looking for a measured move down to this black line, and look how we got it right to the tick. Perfect measured move. So drops on down, get a close outside, it bounces. And the only reason I took a short here was because there's a double test and a trap off the highs of this right here in a downtrend. Notice you made that high, you test it once, because there's a setup right there on a second entry, but I just don't think you should take a second entry right there in the middle of no man's land. Look how flat the EMA has gotten. But when it tries to go higher a third time and turns down, when it breaks lower right there, I like going short right there. Because you had a double test up here in a downtrend. This is a downtrend. This is, you can clearly see that two-tiered channel. Even though there's a bigger picture kind of a range deal, we're on underneath the range right now. Let's look like a trend. So we're playing the trend at this point. We do want to measure down to the range like I showed you, just in case it's a two-tiered range. But regardless, we're in a downtrend. So I like that short. There's a lower high here that you might take because it does close outside this too, but the better one is to wait on that failure from the underside, and you could go short right there. And off it runs, and this thing just keeps going. So then you got to scratch your head and say, is this an overshoot or what are we doing here? But I would draw this trend channel. Originally I had it down here, but I just tightened it up a little bit because it fit better, and we really just kind of overshot that a little bit as well. But prices continue on, they just continue to, let me make this just a little different color. I mean, it kind of breaks on lower, but sometimes it helps just to change the colors to see it a little better. You can see that brown channel working lower there. We did get the overshoot, then we kind of get a close outside, a few more moves. And those aren't really convincing closes. I mean, they're close enough, so you want to be careful taking any more, you know, once we start to, anything that's not off that key entry point. But we do get the break, and we still get a push to a new low, regardless. So even if not, then you get this move and then this move. But this is probably more like that right there. So that really makes that move look questionable right there. Just trying to see where it fits the best. Actually, to make it touch up top there, you got to touch it here, and then that makes it still touch. So that's probably the best spot for it. But you're way too far overdone here, too far away from the EMA and all to enter in here. There is a second, actually the second entry short is right here, but that's just too congestive and not a good signal bar. And then finally you get a lower high right here, right off that key entry point. You definitely want to take that one. Really, you could look at this as a first entry and then a second entry. There's two legs down there. This leg's a little bigger than this one, but there's still two legs down. So I like that one just because it's off the key entry point right near the EMA, and then it comes back. And same thing here. My only concern here is this is just a first entry. And actually you kind of have a little two legs back there, but this looks a little congestive, like a little failed breakout almost. So there's some reasons to say, hey, you may want to take that trade, but at the same time, it's not a perfect entry. And then we drop on down, and now we get to move outside. And you got a little channel working up here, a break, two legs up. And again, I'd want to wait on a lower high here just to make sure that this correction is over. And, you know, people will take these trades all the time and they fail on these first moves. Like they'll try to go short here, and then they try to go short here. And they'll ask me, what could I have done? Well, wait on the lower high. And what's important about a lower high? It just gives you more information that the prices are starting to trend lower. Here you're still making higher highs and higher lows. And as long as you're doing that, you don't want to get short yet. Not unless it's a second entry at a key entry point. And this is, none of these entries would be at a key entry point. In fact, here you're actually entering into the EMA, but this closes just below it. So it still pulls back and gives you another lower high. The only reason I didn't mark that one red is that it, because that's a failed second entry long. Notice that new high, and you get up. Actually, it doesn't break higher, but we still try to go higher there. So it looks close to being a failed second entry. And that's why I marked it green, because if it was a true failed second entry, you wouldn't care what the signal bar looks like, because it's a trap. And we probably still trap some people long there, because it is also it looks like a second entry long. To be a failed second entry, it has to look like a second entry long. So you probably trap some people there. There's probably somebody watching this video that got trapped long right there. If you did, that's a great place to go short. Just reverse. And that is a nice move. If you can just catch one move like that, that's probably all you need today. and then you come up, you try to go short once, you try to go short twice. Not a very good signal bar on mine. It's too congested too, so don't go short there. You're not back to the EMA. There's no reason to go short right there. And when it breaks lower and fails and turns up, just go long one tick above that and ride it back to the EMA. Quick, easy scalp. It does end up running back down one more time and then bounces, and look how it shoots right through the EMA, pulls back and tests it once, pulls back and tests it twice. That's a failed second entry short. It's a double test of this support area here. It's not a perfect signal bar, but it's bullish enough, especially on a trap. Double test, I'm going to take it, and that's another nice move. And then it rockets back down again. Now you get another reversal. Unfortunately, this time you don't really get a good setup, and you don't get a failure. You really want your failed second entry short to be off of the EMA in most cases too, and you don't get that. So you really just don't get a chance to ride this one on up. I would measure that leg though, so if we start up again, and you can see that measured leg was about where we got to. We actually went a little bit higher. We actually pushed up one more time, and you'll see that a lot of times when the market's strong. You'll get your measured move, and then you'll push up or down one more move. But anyway, we're trending up here, and you just don't really get a good entry. And you get your first break, and you get a first entry, and then you get your second entry long, and you're looking for prices to retest and make a new high there. That's a pretty good move up. So I like that one. We're just playing, that's still playing this key entry point, this trend line up right here. But then it's pretty obvious we're just going sideways. And again, you probably want to wait on a higher low. There's a second entry long right there, pull back first entry, pull back second entry. And you can look at this as a failed break lower, and it is at the midline. So I get, if you took that trade, it's probably okay, but I want to wait on a higher low here, and you don't get one until here. And that's actually a first entry, that's actually a failed second entry short, right at the support line, right at the EMA, right at the midline. Look at all that support behind that. Because it's a failure, you don't care what the signal bar looks like. That's fairly bullish. I'm not sure if that's quite, maybe one more tick to truly be in the upper 1/3. But I like that trade. And so hopefully you see all that support there. That's what I call confluence. You got the EMA, you got the midline, you got the support resistance line, and every one of them are holding right there. Boom. And then it actually pulls back here. The only reason I don't like this trade is look at that congestion, and most of them don't have any. That one has no body. That one's got one little bitty tick. Those are one bar trading ranges, so that's congestion, and you could get trapped there, and it could come back to the trend line here. So you just don't want to enter here, and you don't really get anything else. There is a failed second entry short there, but you don't want to be entering up here in the middle of all this. It would have worked, but it's just not worth it. And then finally we come back to the trend line. It's a shame. There's a nice second entry. Notice that eye, first entry, second entry, but you got that little channel coming down. No break of it yet. It's a little spiking channel, although that is a key entry point, and it is a second entry. It's real tempting. If you had a good bar there, I'd say you may take that, especially being way away from the EMA, but it's always better to wait on the higher low, which comes here. And so I'd rather enter there, and you still get a nice move. And you'd want to measure. You notice we're not at the measured move, but measure this shorter leg right here. I told somebody else today, usually your measured moves, they were just trying to measure each of these legs like so in here. Generally, you're better off when you get, at least, if you're in a trend like this, 2 legs, but you can clearly see there's 2 legs right there, and they're perfect measured moves to the tick. So it still works at that level. Just be careful when you start trying to do it in places like that, because you can see you get one leg, and then you get a second leg, and it's close. Then you get another leg, and it's real close too. So it still works, but you just want to be sure, you know, this is an uptrend, so it's probably going to keep going higher. So like here, you get 3 measured legs or whatever. So it might help you to look for where you're going to exit, but I wouldn't look for it to try to hang on to a trade, if that makes sense. So anyway, you may take that one, and then there's just no reason to enter in here. And that's the only one that I might take because it's a double test. You notice you made the low. You test it once, twice. That's actually you test it all the way across there with every bar. So we're probably going higher. But this late in the day, and I think this broke lower and turned up. So you may enter there. I didn't mark it, but we'll at least give it a green. I'm just a little picky about especially entering late in the afternoon right at the 2 o'clock hour, because if you make a mistake up that late in the day, you do not have time to make it up, and that's the problem. So you got to be real careful. So that's what I saw today. I had one trader that was just tearing it up today. He sent me 2 or 3 emails, and he was really excited, and I'm excited for him. He caught some runners. He caught a bunch of runners on this move up, and I'm not sure how much he ended up getting out of them. I'm not sure how aggressive he was with those runners, but he had some nice runners today, and he was real excited about it, and I was excited for him. So congratulations to that trader. Nice job on catching those runners on the way up. And you could catch runners down and up today. And when you get trends this strong, if you can catch a runner, play that trend out. Wait till it breaks outside the exit. If you got in somewhere anywhere down through here and you waited till it broke out right here, I mean, that's a long move. If you were able to get in up here and catch a runner, I mean, that's around 3150, and this thing went all the way down. That's 45 points. If you can just get half of that, and that's what I try to tell people. You get people that'll, I had another trader tell me that he's been at break even for a long time. We didn't really discuss his trading or anything. We just kind of discussed the validity of what we're doing here, I guess is the way I would word that. And he was saying he's been at this for a year and a half, and he just can only get to break even. But if you're at break even, you're banging on the door. Most people would love to be at break even. I'm sure there's a bunch of you listening that would say, man, if I could get to break even, I know I got this. And generally, if you get to break even, you're right at the door. You're about to kick it in and start making money. And it may take a little while yet. But one thing I always tell people, if you're at break even and you're not getting a lot of runners, that's your biggest problem. Because think about it. If you catch one runner on a day, like just one contract, and you get 5 points, well, that's 5 scalps. If you get 10 points, that's 10 scalps. If you get a really good runner on a trend like this, you could get up to 40 points here easy. That's 40 scalps. Think what that does to your bottom line and your numbers. And you don't have to get a lot of those. Just you're only going to get a runner if you move your stop to break even or be E+1, you're only going to get a runner about half the time on a good trend day. The rest of the time you're going to get stopped out at break even. That's just the law of averages. Now if and somebody else asked me today, do I have to, what can I do to try to get more runners? Well, you can manage your runners any way you want. You don't have to move to break even or break even +1. That's just the way I like to do it. And that's why I don't talk a lot about runners, because you need to find what fits your personality. If you don't mind giving up some of your scalp to give your runners a lot more room, you'll get more runners. I mean, you could actually trade this where you're only swing trading and you use all of your scalp to take your risk. Basically, once you've scalped out, if you don't risk anything more than what you scalped, you have no more risk in the trade. So that's the idea behind that. So you can scalp out, take that money, use that for your stop, and as long as prices don't come back to that point, you're in a free trade. If it does come back and stops you out, well, you broke even. You lost your commissions or whatever. And maybe you just figure out what your commissions are and you break even plus commission so you don't lose anything. So it helps you to take the risk out of the trade a lot earlier. So there's different ways to do that. And that's the reason I don't talk about it a whole lot, because it's more personality driven. I can't stand to scalp out and know I had basically 15 points in the bank and then use even half of that and give it back trying to catch a runner. It just that doesn't work for me. I'm too antsy, and I can't sit there and watch it back up and take my profits out. I'll end up hitting even if I tried to do it, set it up automatically, I'd sit there and hit my exit button and close it all. I just can't do it. It doesn't work for my personality. But I know other people that aren't as good at finding the entry points, and so they like to get a trade and hold on to it, and they don't like to give it up because they have a harder time finding the entry points. And so for them, they like swing trading, and it fits their personality better than what I do. What I do doesn't work for them. And so keep that in mind, and that's why I do not talk so much about runners. Figure out what works for you on the runners. Now, you can't change up where we enter, the scalping out part, where we put our stop, safety stop. You can't change any of that, but you can change how you manage your runners. So don't think you're locked into my strategy for your runners, because there's a lot of good ways to manage them. Figure out what works for you and your personality and go with it. So anyway, that's enough for today. I'm going to wrap it up. This does it for the week. I'll be back Monday. Hope you have a great weekend. Hope you have a good trading day tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.